stock option expiration. So let's say that the fair market value did not go above 50 and there's no reason for the employees to exercise the options because they expired worthless, right? You wouldn't buy stock for more than it's worth on the open market. Well, expiration of options requires a reclassification of the remaining balance in additional paid in capital stock options account. Reclassification is accomplished by means of the following entry. So this is essentially just the journal entry to account for them being expired. So again, this is what you would credit twice for the 50,000 for each of the 2 years, and then you would reverse that out, and you're now crediting expired stock options. Just kind of a one-off entry if you ever need to know it, and not too common, but definitely know it if you can fit it into that very packed brain of yours, right? Compensation expense is not affected by the expiration of options because it's like salaries and wage expense. It's already happened. It's reporting what has happened, right? It's the income statement account. So that's just a report over the period. Last slide here. So what about a theoretical? Well, assume in the previous example, only one half of the options were exercised. The journal entry to record the exercise of the options is the same. It's the same, right? Same accounts. But here we're dealing with half of the numbers, right? So it was 10,000 options. Now we're dealing with 5,000. It's literally just half, right? Everything's half you see here. It's all half the numbers. And then if the remaining options expire, the APIC stock options account would have to be reclassified as expired. So this is taking into account the previous two slides we saw, just combining it all for a nice example for you to see. This is the remaining options expiring worthless, right? So we had 100,000 here before, now it's only 50. The remaining are expiring worthless. Just more entries here for you to practice.